Hi, I'm Dzung Nguyen, Vice President and Global Custody Product Manager for the Alternative Investments client segment. Today's topic of discussion will be the Dodd-Frank regulatory impacts on clients trading OTC derivatives and Citi's involvement in the subsequent shaping of industry practice. The Dodd-Frank requirements can be complex and have created significant impact not only on alternative investment segment, but also on other entities that are trading OTC derivatives. Market regulatory bodies, in this case the CFTC, still needs to issue final rulings. Pending final CFTC rules on initial margin, which are expected to be released in the next couple of months, implications for swap dealers and major swap participants are that initial margin may be segregated and maintained by a third-party independent intermediary, such as custodian. This will be a shift from the traditional practice, whereby initial margin, also known as independent amounts, is posted to the counterparty in a bilateral arrangement. The pending new requirement introduces a third party, the independent custodian, creating a tri-party arrangement to provide the segregation and safekeeping of the collateral. This is creating a significant change in the industry, and custodians and market participants need to prepare. The industry recognizes that there will be an increase in the number of third-party pledge accounts required to support initial margin. So whereas Citi have taken important steps to address these regulatory changes, including working with International Swaps and Derivatives Association, ISDA, there are potential implications of the anticipated rules, legal and operational. From the legal perspective, traditional legal documentation supporting tri-party account control arrangements often involves high levels of negotiation. If we're talking about an increase in demand for such arrangement, then this would translate to a surge in document negotiations. Although some level of negotiation is inevitable, what the industry is doing now to prepare is standardizing the tri-party agreement to minimize it. Citi is working with ISDA and other custodians to provide input on standardizing provisions in the agreement, such as terms and conditions of a default. From the operational side, the existing process supporting initial margin differs across custodians. Citi is actively participating in initiatives to achieve streamlined and automated processes. For example, we're working with industry vendors such as SWIFT to provide common messaging and a common platform that support the tri-party collateral process. As for the types of assets that qualify as collateral to be segregated under the Dodd-Frank requirements, these are likely to be in very liquid categories, such as cash and treasuries. Whether a specific arrangement requires the collateral to be all in cash, all in treasuries, or a combination of both would depend on the agreement between the pledgor and the secured party. Citi's segregated collateral solution supports a wide range of collateral in a tri-party arrangement. For cash collateral, where clients look to optimize yield, Citi offers a number of options, allowing clients to achieve yield while maintaining eligibility. One of those options is an earnings credit rate (ECR) program, where US dollar balances can generate credits that are used to offset services fees. Another option is Citi Margin Manager, which allows clients to seamlessly reinvest cash collateral into money market funds. For this option, the eligible money market funds need to be pre-approved by the secured party prior to the pledgor obtaining online access to those funds. Citi offers clients the flexibility to take advantage of a combination of these options. In the coming months, Citi will continue to work actively with ISDA and other custodians to create a streamlined experience across the industry. As I mentioned before, these regulations can be complex and can have significant impact on the current operations of clients and custodians alike. Our goal is to make the transition process smooth for all parties, especially our clients. Thank you for joining our discussion today. Please look for our next industry topic impacting alternative investment managers. Once again, thank you.